Okay, we have finished looking at the additional information. Okay, so now we will start looking at the items in the consolidated statement given. Okay, so since in this question we are given consolidated soft pay first, so I will start with consolidated soft pay first. Okay, so some of the item has have been considered. For example, for PPE, we have done the accounts. For intangible assets, okay, we have done it too. Okay, so the next one is intangible. Sorry, the next one is investment in associate. Okay, so we will open the investment in associate account. Okay, so we put in the balance, yeah, opening and closing. Okay, remember we follow the basic rule, yeah. Debit means increase, yeah, for asset, and then the balance BD is shown on the debit side. What else that we know about investment in AC? Remember we have impairment just now, yeah. Okay, so we have impairment, yeah. Okay, based on information number 2, yeah, we have impairment. Okay, and then on the debit side of investment in associate, okay, we will have share of profit, yeah. So here from consolidated SOPL, okay, you look at consolidated SOPL, okay, you will find share of profit of associate. Okay, so here we are. Okay, so for the share of profit of associate, it will appear twice. Okay, the first one is in the adjustment in operating activities, because share of profit of associate does not bring in any money, any cash, yeah, so therefore we need to adjust that. And then the other one is we show this figure in the investment in associate account, because it increased the investment in associate. So that's what we are going to do. Okay, so first I put it here. Okay, we just put in the amount, yeah. Remember we deduct because previously we add, yeah. And then we go back to our investment in associate account. We put in the figure. Okay, so there is no other information that affect investment in associate, because we have done with the additional information. So what we have left here is the dividend that we receive, yeah, from associate, yeah. Okay, so this is the dividend received. Okay, so now, okay, we transfer to investment in we transfer to investing activities. Okay, so here we have dividend income from associate, so we put in the figure. Okay, so next, okay, we go back to the question. Okay, so after investment in associate is goodwill, I think we have done with goodwill. So the next one is inventory. Yeah. So remember when we use indirect method, there will be changes in working capital. When we talk about changes in working capital, normally we talk about inventory, receivable and payable. Yeah. Okay, so for inventories, okay, this is the opening, this is the closing. Okay, remember we have acquisition of subsidiary during the year, so therefore inventory will be increased by that amount first. Okay, so let's do the inventory account. Okay, so this is our inventories account. Okay, we just put in the figure. We have balance BD. Okay, and then we have balance CD. Okay, and then remember, inventory has been increased first through the acquisition of subsidiary. So we have 2000 here. Remember, look at information number 1. And then so if you notice here, okay, so the credit is more than the debit. Okay, so it means that here we have acquired some inventories during the year. Okay, so we can call it a bank, yeah, or previously we call it as increase, yeah, increase in inventory, yeah. If the amount is here, so it means there is decrease in inventory. Okay, when we say that this is we debit inventory, the particular is bank, so it means this is considered as outflow. Why? Okay, because when we open bank account, it should appear on the credit side of the bank. Yeah. Okay, so therefore, okay, when we transfer to operating activities here, we have increase in inventory. Okay, and then it is outflow. Okay, so that is for inventory. Yeah. Okay, so let's go back to the question. As after inventory, what do we have? Okay, we have receivable. Okay, similar to inventory, this is the opening, this is the closing, and then from information number 1, we have trade receivable of 4,800 from the acquisition of subsidiary. Therefore, when we prepare the receivable account, okay, so this is the debit side. Yeah, we put in the balance and the increase in receivable because of acquisition in subsidiary. Okay, so that's all information that we have. Yeah. Okay, so if we have other information, it is mentioned earlier. Okay, so the credit amount is more than debit. Yeah. Okay, so therefore here it means that we have received money, sorry, we have balancing figure of 34200. Okay, so this is what we call as increase in receivable. Okay, so we call it bank here. Okay, as we can say that a symbol, a symbol. Yeah. Okay, so when trade receivable increase, okay, so it means that we have money, we have a cash outflow. Okay, so why receivable increase? Because we don't receive money from our receivable. So when, in other words, when we don't receive money, so it means it is considered to be outflow. Okay, so therefore, okay, so when we show it in our cash flow statement, we have increase in trade receivable, it is outflow. Okay, so I hope you will agree with me. Okay, so when receivable increase, it means that we don't receive money from our receivable. So in other words, it is outflow. It is considered to be outflow. Okay. So now we go back to the soft P. After we have receivable, I think we have considered short-term investment. Okay, so now it is we have bank. Okay, we know that bank is part of cash and cash equivalent. Yeah. Okay, so I think I have mentioned. Okay, or if I haven't mentioned, okay, so let me repeat once again. Okay, so if we are not required to prepare the notes to a cash and cash equivalent, we just put in the amount here, yeah, as our workings. Yeah. Okay, so the opening balance for bank, okay, is okay. We should take the right figure. Yeah. Okay, so the opening is 24750. Okay, and then the closing is 52 sorry, the closing is 37500. Okay, so we can find the total here. Okay. Okay, so I'm sorry. Okay, so we should look at current liabilities. We have overdraft. Okay, there is no overdraft. Okay, so we are safe. Yeah, if we have overdraft, we need to deduct that one first. Okay. Okay, so after we finish asset side, now we go to the equity and liability. Okay, so I think we have done with ordinary share capital. Okay, so now let's look at retained profit. Okay, so normally we will open retained profit account to find something else. Yeah. Okay, so let's go to retained profit. Okay. Okay, so this is reserve. Okay, so for reserve, balance PD will be credit side, balance CD will be on the debit side. Okay. Retained earnings is increased by consolidate. We can say that. So they use PAT. Okay, so actually this is it comes from, remember, the profit attributable to equity holders. Yeah. So this is not the profit after tax of 273. It is not that figure. Yeah. So please do not take the wrong figure. Okay, so the retained profit here is the profit attributable to equity shareholders. Yeah, so please look at the question. Okay, the figure is 214,800. Yeah, so please make sure you take the right figure. This is not 273,000. For 273,000, sorry, for 273,000, it's include NCI. Yeah, so here we take only the profit attributable to equity holders of the parent. Okay, so we have something missing here. Yeah, because the debit is less than the credit. Okay, so this is referred to the dividend. Okay, so that's why I open dividend payable here. So here we will have okay, it should be hold on. Okay, so here it should be retained profit ataupun retained earnings. Yeah, I use as RE. Yeah, so this is RE. Okay, there are no other things in retained earnings. Yeah. Okay, so therefore we can find this figure. Okay, so we transfer it here. Okay. And then dividend payable. Okay, so we look at the question. Okay, so here we have dividend payable, opening 53400, closing 61800. Okay, so we go down. Okay, so we put in the opening balance, and then we put in the closing balance. Okay, so credit is more than debit, so it means that we have some figure here. Okay, the amount is 66,000. Okay, this is what we call dividend paid to so this is what we call dividend paid by parent. Yeah. Okay, so I just put it dividend paid here. Okay, so we transfer this figure to financing activities. I think we have put in the yeah, this one. Okay, don't forget to put a bracket because this is outflow. Any payment should be put in bracket. Yeah, and any receipt should not be in bracket. Yeah. Okay, so we have settled with dividend. Okay, so now we go back to the question. Okay, so after retained profit, what do we have? Okay, we have NCI, if I'm not mistaken. Yes, we have NCI. So this is opening, this is closing. Okay, so let's open NCI. Okay, okay, so information that should be input in NCI account is this is one of them. Okay, this is the profit that is attributable to NCI. It will increase our NCI. And then remember here, okay, we also have acquisition of subsidy during the year. Parent only acquire 80%, so it means that NCI has 20%. So again, there will be increase in NCI. Okay, so we will calculate the amount later by multiplying 20% with 12,500. Okay, so now let's do that in NCI account. Okay, so first we put in the opening, okay, and the closing. Okay, and then okay, remember just now we have I use consolidated sample, yeah. Okay, okay, this one pun I tukar to consolidated sample. Okay, so remember this one is a profit attributable to NCI, yeah. Okay, and then here we have acquisition of subsidiary. Okay, so let's calculate, which is 20% times. Okay, so we look at the question just now. We have 12,500. Okay, so therefore here we will have 2,500. Okay, we know that debit must equal to credit. Okay, so therefore here, okay, the balancing figure is 53,200. Okay, so therefore this is the cash paid, the dividend paid by NCI. Okay, so now we can transfer this figure to investing to financing activities. Okay. Okay, so we started with NCI. So let's go back to the question. What else that we have? Okay, so after NCI, we have long-term borrowing. Okay. Okay, so for long-term borrowing, okay, we cannot simply look at the difference here. Okay, we need to check whether we have long-term borrowing when we acquired a new subsidiary. Okay, so here we have long-term borrowing. Okay, so therefore we need to open the account. Okay, so opening and closing. Okay, and then we have acquisition of a subsidiary. Yeah. Okay, so when Pearl acquired gold, gold has a long-term borrowing. Yeah. Okay, so therefore it will increase the liability. So that's why it appears here. So debit must equals to credit. Okay, so therefore we have balancing amount of 10,000. Okay, so it means there is decrease in borrowing. So therefore it means we pay for it. Yeah. Okay, so we have payment. Yeah, long-term borrowing is financing activities, so we put it under financing activities. Repayment of long-term borrowing 10,000. Yeah, because our long-term borrowing has decreased. Yeah, so it means we pay for it. Okay. So we settle with long-term borrowing. So now we go to current liabilities. Okay, under current liabilities, we have, I think we have only 2 items left. Yeah. Okay, because I think we have done with dividend payable and interest payable. Okay, so let's look at trade and other payable. This is the opening, this is the closing. Okay, we transfer to the account later. Okay, let's check. Okay, do we have trade payable when Pearl acquired gold? Yes, we have. So therefore the liability will be increased by 1,200. Okay, so let's go to the account. Okay, so we put in the opening, we put in the closing. Okay, normal rule. And then just now we checked that when subsidiary was acquired, there is trade payable. Okay, so it is 1,200. Debit must equal to credit, so the balancing figure here is 1,800. Okay, so credit means decrease, right? Okay, so why our payable has decreased? Because we pay for it. Okay, so that's why we have bank here. Yeah, so we can say that this is decrease in trade and other payable. Okay, so we transfer. Okay, so remember, so debit trade payables, we credit bank, so it means it is a outflow. Yeah, so therefore under changes in working capital, we have decrease in trade payable, okay, which is outflow. Okay, so we have done with trade payable. Okay, and last one is deferred tax liabilities. Okay, so when we talk about deferred tax liabilities, so it means we talk about tax. Okay, so from what you have learned previously, okay, so for tax, we have 2 types of tax. Or the first one is what we call income tax. Okay, the second one is deferred tax. Okay, so normally we will combine the two. Yeah, so in this question, you are only given the deferred tax liabilities. Okay, so therefore, okay, sorry. This is the opening. This is the closing. If we have a tax payable or tax recoverable, we will combine that together. Yeah. Okay, and then if we look at consolidated SOPL, here we have tax. Yeah. So this is the current year tax. Okay. So let's look at the tax account. Okay, so this is the balance BD. Okay, so balance BD here should include deferred tax. I should short form DT plus tax payable, if any. Okay, sometimes we have tax recoverable. Tax recoverable is asset, so you put it on the debit side. Yeah, we have balance BD for tax recoverable. It is on the debit side. Yeah. Okay, so sometimes we have tax payable at beginning, and then at the end we have tax recoverable. So balance CD should be here. Yeah, because later on it will for asset, balance CD is on the debit side, sorry, on the credit side. I repeat, for asset, balance CD is on the credit side. Yeah. Okay, so therefore if we have for example tax payable at beginning and then tax recoverable at the end, so it means balance CD for tax recoverable should be appear on the credit side. Yeah. Okay, so in this question we don't have tax recoverable at beginning or at the end. We only have deferred tax, so we treat it as a normal liability. Okay, and then from credit, okay, so where should we put bank, where should we put SOPL? Okay, so bear in mind, we normally for tax we pay for it, so tax must appear, a bank must appear on the debit side. Yeah, because when we prepare bank account, tax will be on the credit side because it is outflow. Okay, so therefore the SOPL is here. Yeah, consolidated SOPL. Okay, so look at the question. Okay, the figure is 7,900. Therefore, the balancing figure is the tax paid, 84,000. Okay, so we put in our where is it? Here. Yeah, under operating activities. Okay, don't forget to put bracket. Yeah. Okay, so what else? Okay, so let's go back to the question. Okay. Okay, we have done with soft P. So now we go to SOPL. Is there anything that we have not taken into account? Okay, we haven't considered this one. Yeah, so this is profit before tax. Yeah, so this is the first figure in our consolidated SOPL. Yeah. Okay, so we put it here. Okay. Okay, so is there anything else that we haven't considered? So let's look at the question. Okay, so if we look at soft P, we have done everything. If we look at SOPL, I think we have taken everything as well. Okay, okay, so we have taken the finance cost. Okay, we have taken the gain on sale of land. We have taken the share of profit of associate, profit before tax and tax, as well as profit attributable to equity and NCI. So it means that we have covered, we have considered everything. Okay, so after this, what should we do? Okay, after this, you find this figure. Okay, so opening balance is 77250. The closing balance is 117. So it means here, okay, there is increase in the cash and cash equivalent. Yeah. So if it is decrease, okay, it means that the balance at the end is less than balance at beginning, it will be outflow. Yeah, outflow means it is net decrease. Yeah, so in this case balance CD is more than balance BD. Okay, so therefore, okay, we work backward. 117 minus 77250, you get 39750, so it is positive. Yeah, okay, so therefore it is net increase. Let's say you find negative figure, so it means that it is net decrease. Okay, so let's say now, okay, you do this part for more than 35 minutes. Okay, so you leave everything. Okay, so you just go to the next question. It means that you go to question 1. Okay, because normally these are the information that we need. Yeah, because if we look at the theory parts just now, okay, it does not relate to this consolidated statement of cash flow. What I mean is that, okay, so the theory question does not ask about the liquidity position of the company. Okay, so it means that you don't have to calculate the figure for this one. Yeah. Okay, so I will put this figure in red. Okay, so there is no marks given for this figure, so you don't have to calculate this figure. Yeah, why? No marks given, so why should you waste your time to find this figure? Okay, first no marks given, and then we don't use this figure anyway. Okay, so you don't have to calculate the net cash flow from operating, net cash flow from financing. Yeah, okay, don't waste your time. Yeah, okay, because no marks given. Okay, the one in red is no marks given for that. Okay, so I just put in the figure, okay, for checking purposes. Yeah, so remember in the exam, okay, the figures in red are not given marks, so don't waste your time doing it. Yeah, so I think that's all for this question. Yeah, so I hope you will appreciate that consolidated statement of cash flow is not difficult. Inshallah you can do it. Yeah, only that you have to do it fast, okay, so that you can complete it in the time given. Okay, so that's all. Okay, good luck in your final.